Hi everyone, Bowen from Enhanced Asset Management here, just back with an update today on some of your direct share positions, which have provided updates throughout May. I'll also be providing a quick update on the performance of the Australian equity model. So for anyone invested in that portfolio as well, stick around to the end for a quick update on the performance of how that fund's going. I'll start today with ResMed, who reported their third quarter results towards the end of April. And it's become a pretty consistent theme now for ResMed that they'll grow their top line at low double digits. They were 10% for the 9 months to March 31. And they've been experiencing really strong cost control, which has been able to grow out their net income at a much faster rate to what they're growing their revenue. And that's a great thing for shareholders. So we saw a 40% increase in net income for the 9 months through to March 31st, 2025. And I mean, one thing that's not showed on these results here that really benefited the share price as well was CEO Mick Farrell just stating that ResMed's products will be immune from any tariffs in the US, which again is an extremely beneficial thing for the business. And as you can see here, on the announcement of these results, there was a really strong uptick in the share price for ResMed, and it's continued to trend higher over the past 2 or 3 weeks, sort of in line with the way the market's been performing as well. So, back over $38. We've said before, we can see this one getting back over $40 in the short term. So really happy with how this one reported. Continuing on for the good news, one of the new positions within the portfolio, Zip Payments, announced their third quarter results, I think maybe 2 days after we took the position, so very early on. And these results were really strong. The cash EBITDA was up to 46 million for the third quarter, and that allowed management to increase their guidance for the full year EBITDA up to 153 million, which is up from 147 million. And you'll see on the chart here soon, this one has performed extremely well. We've bought it relatively cheap after some pretty significant downward trends in the share price, and these results reaffirmed our position that Zip's in a pretty good spot at the moment. And then very shortly after these results came out, they also provided a trading update at the Macquarie conference. And this update came just after Block, so the owner of Afterpay, who are a similar business to the way Zip operate, actually reported some pretty softish numbers for their US growth. And I mean, there were a little bit of concerns in the share price off the back of that. And, that hit Zip's share price a little bit in the short term. But following this update showing growth in April of 40%, I mean, it was all guns blazing. And as you can see in the chart here, this one's really taken off over the past month or so since we bought. So we took that initial position at around $1.50, and this one's up to well over $2 now. So it's been a fantastic performer. Next up, we had AUB provide a guidance update, and a really short one. This was basically management saying everything is going really well, and they expect that their net profit for the full year would be towards the top end of their 190 to 200 mil of guidance. So again, reaffirming our position in AUB and showing that profits were really coming through and that management had the business working really well. The share price of this one, it surprised us a little bit the way it's taken off in the past sort of month or two, now up to all-time highs today as I'm recording this video. So again, another one that's performed extremely well for your portfolio. And finally, this one came out at the start of the week. We had Life360 report their first quarter results. And again, this one just has gone from strength to strength since we bought it at just over $11 back in February last year. And total revenue growth of 32% for the quarter. And we saw adjusted EBITDA of 15.9%, which is 272% higher than where it was this quarter last year. Management reaffirmed their guidance. Everything's working really, really well. And surprisingly, we saw a pretty significant share price move off the back of this. And as you can see on the chart here, we're now up over $30. So from our initial purchase of $11, 18 months ago, this one has been an absolute cracker as well for the portfolio. So we're, at that point now where valuation becomes a little bit of an issue. So off the back of this, the strong share price performance, we've de-weighted our position a little bit. We've cut it in half, and our intention is actually to exit the position if we see a little bit of a share price pullback. And If this one comes back to levels that sort of $25, $26, we'll probably look to get back in because it's a cracking business that's growing really well. But I think at the moment, up above $30, it's a little bit steep for the business where it is now. And as I said at the start of the video, just a quick update on the Aussie model performance. So you can see up on screen here that since inception on the 1st of September, so what are we, 9 months, 10 months down the track, the portfolio is now up 9.5% versus our benchmark, which is the ASX 200, sitting at 5.15%. So, we've been able to generate some really good outperformance for clients in the short term, and we're really confident with how the portfolio is positioned now to continue this growth moving forward. As always, this is general information only. If you do require any further financial advice, please speak with a licensed advisor. We'll be in touch shortly. Thanks, guys. Hope you're all well.